Wednesday. What's up, everybody? Wednesday morning. Hope you guys are having a great day. Welcome to today's edition of the DMC. I'm your host, Chuck Fulkerson. Let's take a look at the markets from an educational perspective, identifying breakouts, reversals, and all that fun jazz. This is really our first DMC of the week since we had no trading on Monday, and yesterday was our live trade room. So hopefully you guys have had a good week up to now. Let's go ahead and dive in. S&P this morning down about 1.5%. We have fallen a little bit in the overnight session, pretty hard actually, but really didn't fall off of a true supply level. Just rallied up near a pretty good area of supply. On the 1 hour chart, we were looking at this wick over wick here below this pivot high, and we were unable to get into that region. On the 4 hour time frame, we are still in our bigger picture downward trend. So we've rallied up the last few days, but in reality, there was no real reason to take advantage of this move since our bigger picture downward trend has continued. And so as we've started to roll over, I think it now puts a little bit of a good opportunity for a tradable entry right about here. There's a couple of decent areas on a smaller time frame. You might also want to consider this level right here. So we really have two areas that I think make decent entries. So whenever I have two levels that both seem to be pretty good entries, the upper level I think in this case is a better level because it's found on the hourly chart. 15-minute chart is typically not as strong, but it's also right around the London Open, and around the London Open is typically going to be a better level, a better time of day than the midnight time of day that the hourly level was formed. But the hourly level, I think, is a slightly better level. So we make a confirmation entry of the first area and a limit entry of the second. Now, the Nasdaq actually did rally into our wick over wick supply area. So those of you that are in our live trade rooms, hopefully yesterday, you were able to see as price rallied into this region and took advantage of this big move down. This was the area that we were looking at from our Monday night session as well as our Tuesday morning session for a reversal. And if you're still in that trade, I think now it makes sense. You've moved well more than your 2-to-1 reward to risk. I think now it makes sense to move your stop. I would say move your stop at this point down to about 11,500. So that trade has picked up about 172 points. Move your stop down here to about 11.5. I think it's a good place. And similar area here to what we have in the S&P for a potential reversal. So let me go ahead and get rid of this level since we've bounced off of that one and moved away pretty nicely. Russell 2000. We looked at a little bit of price popping up through here. It didn't really do a whole lot, and it's actually down and didn't even come close to making it to its supply area. I would say in the Russell, your best opportunity is going to be some sort of a breakdown below 1650. We're not quite there yet, and if that breakdown doesn't occur, I'd actually look a little bit higher than the comparable levels in the S&P and the Nasdaq to this wick over wick area right here. This actually is two pretty good areas as well that are both a bit higher. But I actually like the drop down below 1650 to be the better entry. So those are my main equity market levels for today. Taking a look at crude oil and gold. Crude oil we had looked at on Monday night, we had looked at a breakout trade above this 109 area, and we did get the breakout trade, but notice 6 candles later, price hadn't gone your direction. And one of the reasons for the 6 candle rule, if those of you that are familiar with it, we say that the 6 candle rule exists because if it hasn't started going your way within 6 candles, it's probably not going to go your way. And this is a great example of that, as we didn't really go our way, and now we started to fall away pretty hard. Now, that means that on a 4-hour chart, we're in a defined downtrend, right? Lower swing lows and lower swing highs in crude oil. So we have come into a 15-minute area of demand. And if you wanted to take that long, your entry was this candle right here, candles later, 1, 2, 3, 4, 5, 6, we've not gone anywhere, telling you it makes sense to get out of the position as it doesn't look like it's going to go anywhere either. So let me close that up. Let's look at this on the hourly chart and say, okay, where's a decent opportunity? I think you've got a breakdown below the low here as an opportunity to get short. And, we've had a pretty strong move down. The next area, we could be, honing in on $100 a barrel again. Let's see if price comes back down into that region. Now, on a daily chart, what does that look like? Well, we've had a pretty big sell-off into this region, but 100 has been, 100, even a little bit below 100, around 91, has been a pretty good area of support and where we found some support. So I think it makes sense to look at it on the small time frame as a chance to get short as price comes down below this 103.74. Now, what this also does is it gives you an opportunity for those of you that are a little concerned with the higher costs that you deal with in your daily life to say, okay, this may be a time to re-enter a longer opportunity on a hedge against some of the maybe the fuel costs that you're experiencing in your daily life. I'm going to pull a video out on that here soon, just as a way to think a bit differently about market opportunities. Now, also on this hourly chart, I'm going to wrap my lines around this little level right here. I don't know if or when we're going to get back there, but that's a really nice little level. Terrible time of day, but a good level nonetheless. Gold is really just been as I like to call it, a steaming pile of hot garbage. There's just nothing here to trade in gold. The 4-hour chart is meh. I've got an hourly level above me that's way up here, and a 15-minute down here. But other than that, there's really nothing in between that excites me in gold at all. Nat gas, we had a gap down, and I said, well, that could serve as a gap and go, and it gave you a potential entry right here, and then just kind of went nowhere, right? And then we gapped, we got a little bit lower, came into the gap fill area, and got a nice little move away, and now we're still just hovering right here at 6.6. We'd have to drop below here to really get a decent entry. 4-hour chart is doing a very much amount of sideways chop and not really bouncing off of this area of demand. So I would anticipate price continuing to drop from here. Looking at some of our currency markets, the one that I've been looking at the most recently is Japanese yen. We did get the breakdown in Japanese yen, so do me a favor, leave me a comment down below. Let me know if you jumped in on that Japanese yen breakout. We've been talking about it for a long time, and it did work out for a pretty nice trade. We've run back up a little bit from the low, so if you are still in the trade, at the very least, move your stop to break even, maybe even take a little money off the table as we're gaining a bit of strength. And if we do rally back up, look for that breakout line to act as a resistance point. And then the euro level, unfortunately, we had a pretty good setup in the euro, but it didn't seem to work out because we were looking for price to break above this region. We got a little bit of a break above, but 1, 2, 3, 4, 5, 6 candles later, it had gone nowhere. And this goes back to the story that I told earlier. If it doesn't start making your move within 6 candles, it's probably not going to move your way. And then we see that it did sell off. So I'm okay with that, right? I'm okay with the 6 candle rule getting me out of a trade at basically break even because that typically keeps me out of bad trades. So hope you guys have a great day. That's all I have for today. If you have any questions, as always, shoot us an email, support@tradersarmy.com. Till tomorrow, everybody, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.